All
All
right, and
right.
we're live.
We live to see another Thursday Agent Blend.
Hey, new episode on, look at this, St. Patrick's
Whoa!
Day.
Yes.
Happy St. Patrick's Day, buddy.
Happy St. Patrick's Day. Wow.
Well,
Yeah,
as we've been talking about, hey, there's not a shortage of things going on in our lives and our careers, just with our families and everything. So,
true.
um, actually, Nicole drove back home today after she left because she's a teacher and she's not your average teacher. She likes to go above and beyond and dresses up for every
Uh,
holiday. And so, she pulled down we have a bin, St. Patrick's Day bin in our garage.
all
So,
right.
yeah. So she came back, she got her St. Patrick's Day gear, and then she's off to her meetings over at the district office.
Cool.
So I thought the least I can do is put a little badge right here, right?
Right. Exactly. Exactly. Well, at least Nicole's not going to get pinched, right, by any random leprechauns.
Yes. Oh, I remember that year.
Yeah.
But you know what? Speaking of Irish, I think you picked the first topic with Buffini.
Oh, good call. Yeah.
I
True.
just connected those dots right now.
Yeah. Yeah. So Brian Buffini, for those of you who don't know who he is, he's an entrepreneur. He was big time here in real estate, actively helping people buy and sell homes. I want to say in the late 80s, early 90s. Did really well and started Buffini and Company. It was actually called Providence Systems, I believe, when he first got started. But so he's built his business up. It's one of the largest coaching and training companies in the United States for the real estate sector. So this first article has to do with him. It says, famed business coach Brian Buffini urges agents not to worry about iBuyers. So we've talked, Jeremiah, about iBuyers a little bit on our past episodes.
We
Uh,
have. Let just in case someone doesn't remember or hasn't heard of them. Do you want to expand on what an iBuyer is?
Yeah, I mean, so an iBuyer, think of it as typically it's a cash deal. Somebody who oftentimes it's kind of sight unseen, and they go, "Yep, I like the area, and it meets certain criteria for them, so they will go ahead and they will make an offer on your home." There's fewer strings attached oftentimes when you're dealing with an iBuyer, and there's a little bit more flexibility in terms of move out date, things like that. So if somebody is looking for a flexible move out date, and if the price is right, then maybe that's a good fit for them. You don't always get what you might realize as a true market value for your home if you're going through an iBuyer program. So there's a trade-off there, but for some folks, I think it makes a lot of sense.
And,
Um,
and and we've talked about it where we talk about, listen, there's definitely benefits to it. The convenience factor has to be
right,
one of the most, right?
it
But
is.
the but
Yeah,
but we've also talked about the whole concept of, okay, well, yes, you don't have to pay an agent, you don't have to pay commission fees, but their transaction fees normally not only exceed what you would have paid for commissions, but then they're tacking on their home inspections, the repair costs, all that stuff. So,
that's right.
no surprise. Everything comes at a cost, and what is convenience worth to you? And I guess that's what it comes down to for those. That's what I.
Exactly. Yeah, and I think you make a great point there, in that they will still go through their inspections, um, and they know that likely you're not somebody who does this every day. So they're going to take, in some cases, advantage of that, and go through their process. And you might start here, and then all of a sudden end up here with what you actually take home with your net. So it's just something to consider. But again, for some folks, the convenience factor, they don't care, and it's worth it to them. So
Yeah, yeah, and
yeah,
And I'm sure there's smaller investors that are doing this, but correct me if I'm wrong, John, but the iBuyers that we're normally referring to are the Redfins, the Open Doors, Zillow
Yeah.
before they closed their iBuyer program. So these are big, large backed companies that have, you know, millions and millions of dollars to be doing this, but they're there to make money, right? It's
Yeah.
so it's a service to make money. And I totally derailed our conversation asking you about iBuyers, but
No,
yeah.
no, it's okay. Cause I mean, this came up actually recently with some clients that I'm taking care of right now,
Mhm.
where they had made an aggressive offer on a home here in North County, and the home closed. And who was the buyer? It was Redfin. So Redfin bought that house, and they didn't realize that they were up against Redfin.
Mhm.
You know, they thought, no, I'm up against the other 150 people that just came through this house, right, with their kids. That's what they thought. So, and that's a whole other conversation because I have my thoughts on that.
Yeah.
I don't particularly believe that that's right. But as a seller, what are you going to do? Oftentimes, you might take the highest price point, or again, the convenience factor, or a combination of the two.
Right. Right.
So, yeah. But Brian is saying here that iBuyers and the what we call FISBOs, or for sale by owners, only make up 8% of the sales from this past year. And okay, maybe that's the data that we have kind of at the surface level. um, I know that that is increasing. At least it feels to me a whole lot like that's increasing because our inventory has plummeted. I know homes are still getting sold, and I know people in the area that are still talking with others, whether it's you know the Redfins of the world about buying their house, or somebody else, Joe Schmo Flip
Mhm.
Company that
Mhm.
gives them a slip on their front door. So that is definitely happening right now. And Brian's argument on all this is that it's going to go back to their relationship, and that when people are going to use your services, whether it's to buy or sell a home, it's because they trust you. You are their trusted advisor. And
Mhm.
so, he's saying that the best service we can provide for our clients is really to help them understand the macro marketplace trends right now for the real estate sector, what's going on there, and then honing that down into their specific neighborhood, and understanding the impacts of COVID and how people are moving across the country to different areas. And eventually here, and I guess we saw it yesterday. We're starting to see hikes in mortgage rates, and so that is something that Brian is definitely saying is going to be one of the big variables for this year, and will absolutely impact people that are kind of right on the cusp of being able to afford that house.
Mhm.
Um, so yeah, I'm rambling, but what was your take, Jeremiah, on some
No,
of
I
this?
mean, I'd piggyback off a couple of the things you were saying. I mean, I think number one, going back to Brian's figure of that 8%, that's going to vary, right? I
Yeah,
mean, I think that we see that in our market here in San Diego. And shoot, it's been varying over the last couple of years, specifically, just
right.
with the volume of the sales that we've seen go up and down. But I know he was presenting this, right? So he has to be very general, and I bet
Yeah.
I think it's even a national figure that I think he was
Hmm.
citing.
Yeah. Yeah. It's a very high level.
Yeah. So I think that I think it ties into what you're saying in that it's going to be different in every different market, in every different region, in every different community.
Right.
And that goes back to having an advisor, a trusted advisor, someone that is competent and specializing in that area, that's going to be able to guide you for that specific area.
Hmm.
Because these iBuyers, as we talked about before, these are large, oftentimes, or more often than not, they're the large companies. They're looking, they're just looking at data. They're
Right.
not looking at homes. So I always joke with when I chat with people and they go, "Oh, Zillow said my house is worth this much," and
Oh,
I'm like, when did Zillow stop by your house? And they go, "Oh, well, no, it just says that online," and not that that
yeah,
hasn't been accurate in the past or
right,
inaccurate in the past, but it's just a calculation. They're just going off of just just data and the numbers, and that's where when you are hiring a human, someone that specializes in an area, you're going to get a much better idea of, wow, we can do a lot more to increase the value to take advantage of extra equity in your home,
yeah,
or you can just go to a data machine and just kind of just do whatever it spits out. So
right.
I mean, yeah, so that was one point I wanted to make. The other one I wanted to talk about really was just, you were referring to your clients that lost out to a Redfin
Hmm.
purchase. And to me, even though the headline of this was saying, famed coach Brian, urges agents not to fear iBuyers, I think what you were talking about, I think buyers need to be fearing iBuyers more right now.
Yeah,
I mean, it's that is your competition in purchasing your first home, your
right,
next home, your just fill in the blank, your first investment property.
right,
And to me, in a market where inventory is already historically low, and you're already competing against multiple buyers, if not just an
yeah,
absurd amount, to toss into the fact that there are also companies with giant pockets competing with you. Yeah, that's I don't know. Maybe I'm going off on a tangent here, but I'm more concerned about that.
yeah. No, I agree with you. Um, I'm concerned about that too, and I wouldn't be surprised if we see some laws set in place that aim at trying to protect the mom and pop consumer when it comes to purchasing a home.
Mhm.
But at the end of the day, as we both know, it's the seller's choice. Seller gets to
Mhm.
choose. They own the property. They choose who they sell to. Um, another point that was made is that as these mortgage rates start to rise, and everyone freaks out about that, but we have to put that in context, right? Historical context, that these are still very, very favorable rates.
Mhm.
You know, and so the article is saying that likely there's going to be a leveling off of the marketplace. We're not going to see likely the big drop off that we've seen in the past, and I believe that that's COVID has expedited a lot of this because
Mhm.
people can now move where they want to move and work from home remotely, many of them, and so that's really opened up the pool of buyers for places like North County, San Diego, which is
Mhm.
just one of the best climates in the world. And so people are flocking here. So, like to your point earlier, Jeremiah, it's going to depend on each, market is unique. Um, but what we're seeing here, like you were saying, historical low inventory and just an extreme backlog of people that want to purchase homes.
Yeah.
So I
And
think that,
and not enough homes available,
and
right?
that kind of ties into our next article
Yeah.
here. Um,
Hey,
uh,
let's make the jump. Let's head over.
okay, okay. So the next article here, and where is this one from? I didn't
I
write
think this
this
was
down.
on 10 News. It was just a
Okay,
local 10 News
yeah.
here in San Diego.
Just talking about massive housing developments to open around San Diego County. And what was your take on it? I took a few notes
Yeah.
on this.
Well, it in previous episodes we've talked about. I don't think it's happened as much here in San Diego, but I've chatted with other colleagues of ours, in Arizona and other
Mhm.
states where we're seeing large developments taking place and they're not for sale. They're
Right.
apartments, they're rentals. And we see a lot of money being funneled into building new communities that will never be sold. They're never going to
Right.
go to the consumer. They're filling this void of essentially these buyers that haven't been able to purchase,
Mhm.
or just the traditional renters that have no interest in purchasing, and taking advantage of the absurdly high rental rates, those that are climbing up. And then this article was specifically talking about how, for as much as we say San Diego doesn't have enough new homes being built, what
Mhm.
did they say? It was 4,600 new apartments
That's right.
coming to San Diego, coming to the
This
county this
year.
year.
Yeah.
And it's been a big shift, because it used to be, okay, let's build it in the metro, San Diego metro. Let's build it downtown. Let's really stack them all. Now we're heading out to the suburbs,
Yeah.
out into East County, out up into North County. I mean, we not only ran out of land, but these investors do find, are confident that they're going to be able to capitalize on going to some of these areas, even if it's more expensive land, because of those higher rental rates.
Right. Yeah, so I think it's at a point now where it makes sense for them, obviously, to make these types of investments. They're confident that the housing shortage is such that they will be able to get the rent that they want to get.
Mhm.
And I bet, knowing in general the rental market here, yeah, I think that they will get that. So they're looking at areas. What do they say? Chula Vista, Mission Valley, Mira Mesa.
Yeah.
Um,
It almost just seemed like anything right outside the San Diego metro. I
right.
mean, you have the Pacific Ocean that was blocking them from going that way. So it
Yeah.
was just expanding out of the downtown metro
Yeah. I
area.
mean, okay. So my uncle, his name's Bob, was always harping on me about this. You buy real estate outside that ring of growth,
Mhm.
just outside the ring of growth, and the ring of growth will overtake you. And this is textbook. This is exactly that, where everything that can be built within reason has been built up along the coast. You can still go up in some cases, but when you're talking about these huge developments, like putting in 4,600 new apartments, you're going to need space to do that. These are large operations, so those are going to be outside of your city proper. And so these builders, they know that people are again, many of them are working from home. They know that the typical renter, let's say, that's going to rent an apartment like this, is going to want nice amenities to go with that. So they're going to throw in some nice amenities in the mix there, and maybe some restaurants, some shops down below, and then have the living space up top.
Mhm. Mhm.
So they're doing that, and they will absolutely get, I believe, they're going to get those filled up in no time.
Yeah.
Because what's the alternative? It's living with mom and dad and grandpa and grandma and everybody under the same roof,
Yeah.
right? Or you're paying a lot more.
Yeah.
So there's a give and take there, and I think that these guys know it. They know it.
Well, and there's not as much. I mean, for as large as San Diego County is, and I'm not talking really far East County, Ramona, Julian, that area. I'm just talking about just kind of like the corridor of of the 15, that's
Uh-huh.
going here. That because of us having so much military up at Camp Pendleton, up in the north, downtown San Diego, and then right there at Miramar, all of that land is restricted to the military.
Right.
So there's not that much more land in all of those pockets that are close to our freeways that can be built on. So to me, that's not being talked about enough too, because when they're building all these apartment buildings, you are basically just eliminating every final pocket around in these
Right.
parts of the counties. And gosh, I mean, it feels like it wasn't too long ago when I used to tell people, well, the place to be is west of the five, because everything else doesn't really go up in value anymore. Then we kind of moved over to do you remember hearing that? And then
Yeah.
it was like, okay, then now we're moving over to El Camino Real. We're just kind of moving over east a little bit. gosh, now I think it's the 15 freeway. You know what I mean? I mean, it's like anything west of the 15 freeway, there's just no land available
Right.
anymore. So yeah,
Yeah.
it's
That's a good point. And, we're pretty fortunate really to have the military presence that we do. Because if they didn't own that land, then it would basically turn into
yeah,
Los Angeles.
yeah,
It would
yeah,
just be one big Los Angeles.
yeah. Oh,
And
can you picture Camp Pendleton?
oh, I
All
know.
that whole stretch right there
Yeah,
along the beach.
yeah.
And then all those hills, those beautiful hills after it rains that are all green and like
Mhm.
rolling hills, that would just be all built on right there.
Yeah, yeah. There'd be no way around that. That would just yeah.
Yeah.
So so we're very thankful that the military's here. Um, but yeah, I think that it's these type of developments are going to also drive our prices for single family residences up as well. Because
I agree.
even
Yeah, I agree.
there's some smaller developments that are kind of high density developments like this here in North County, relatively coastal, uh, not nearly to this scale. But that's the trend is that we only have this lot. How do we maximize as a builder our return on our investment and
Yeah. And it's
appease
just,
the
yeah,
city?
yeah,
So that's the trend. So owning a piece of property that's detached now, and you have a backyard, little front yard area, uh, that's going to become more and more rare and more valuable. It already is.
yeah,
So
yeah. We've already seen that play out in just the last year in the state of
yeah.
California, and then all of our individual cities. Gosh, I was talking to someone that wanted to build an ADU in Encinitas, and they
Hmm.
just said, "Boy, they're handing them out like fresh cookies if you just stop by the
Huh.
city." I mean,
Yeah.
it's a piece of cake.
Yeah.
So it's wild.
Yeah. Huh. Well, what's our third topic here?
Third topic. I've never used the word stagflation before. Have
Yeah.
you? I had to go like, am I pronouncing that correctly? Like
Right.
it's not in my lexicon. But this was out of Bloomberg. Stagflation is already here in the housing market, and really if I can quote something from the article, they just said soaring prices and low inventory are causing headaches for home builders and buyers, but benefiting owners. And therein lies the Fed's predicament as it seeks to lower inflation.
Yeah.
And I know that's a bit of a mouthful, but I mean that's describing exactly what we're seeing. I mean it's not it didn't mention the fact that we have low inventory, but nothing can be built to scale. And we're talking about construction for homes that are for sale, not like the rentals in the
Right.
previous article.
Right.
But supply chain issues, right? With the contractors, they're not able to build anything fast enough. The the rates have been, well, I don't know if we want to get into rates right away because that's a huge topic of this one.
Yeah.
But just to spell out the rest of it, I mean, yeah, we have the low inventory, we have the supply chain issues for the contractors,
Right.
and then you have the buyers that aren't able to. I know from my own experience, I have some of my buyers that choose to go the new construction route
Hmm.
because they weren't able to win a bidding war on a resale property. But
Right.
then now they are delayed in even closing and moving into their new construction because of these issues. So I mean, some of these are just compounding one another. And then at the end of the day, we have the Fed that is trying to handle this inflation issue, and that's where we get to rates. So,
Yeah.
I mean, this is the biggest pickle, in my opinion, right now. I think this article even talked about the fact that in general, if we could have higher rates, then it would slow down the excitement to buy or the ability to buy,
Right.
thus increasing inventory because we wouldn't have as large of a demand. But the risk of actually raising rates enough and high enough to make a huge difference in the housing market
Hmm.
then risks affecting our economy.
Yeah.
And I mean, and I thought, I mean, that's where I just feel like we're in a pickle right now, because yes, I do believe personally that we need to raise the rates. So it is a little it's a little harder to purchase. We don't quite have as many investors coming in just seeing these steals because they have the cash or they
Right.
have access to really cheap money. But at the end of the day, it seems like the housing market is the only market that is somewhat guarded against a collapse because of all the equity. I think Brian Buffini was talking about that too, right? You
Yeah.
know, we have so much equity in these homes that even in a market that starts to level out, we're not going to fall over and collapse.
Right.
But how about everything else outside of the housing market? And that can be just as catastrophic
Right.
to to the middle class, to everyone here in America, as far as what's happening to jobs, what's happening to prices of everything. So yeah, I don't know, John. I mean, I after I finished reading the article, I was just in general just scratching my head, just going, what direction should the government be going?
Yeah. Um, I mean, we all knew that by printing large sums of money, that was going to dilute the dollar.
Yeah.
And I think investors, they're investors for a reason. Most of them are savvy. They've been through some ups and downs, and they have come to understand, at least right now, that the housing market has been very stable and has continued to appreciate in value quite a bit more than other investments. And
Mhm.
so they also understand that if they could secure a home or multiple homes, they can also have a fixed monthly payment. And that fixed monthly payment, that asset associated with the fixed monthly payment, is going to keep up with inflation.
Mhm.
So if I buy a home today for $2 million in Carlsbad, and I park money there, I do have a loan on it, but okay, I have somebody in there. The tenant is effectively paying for that. Maybe there's a little bit of cash flow to be had, but even if there isn't much cash flow at all right now, many investors are still making that investment because they know, again, it's a fixed monthly payment and that this
Mhm.
real asset is going to keep up with inflation. So if they go to sell that home in a year, 2 years, 3 years, whatever it might be, likely we're still going to have a demand for that house in that neighborhood, and very likely it'll be worth more at that point. So, so we're seeing a lot of that. So we've got high prices, and to your point, Jeremiah, one of the things that could take prices down a little bit, adjust them down, is our interest rates. Um,
Well, and it doesn't even need. I don't even think we need to have them come down. Just have them level off, right? I
right?
mean,
Yeah.
it's this
Yeah.
constant escalation
Yeah.
that it's. I don't think it's healthy for the market. I don't think it's healthy for the country. I
That's
mean,
right.
but continue.
Yeah, so it sure feels a lot like right now where we're at in North County, San Diego here, that this is more or less the new normal. And that yes, things might level out, they might, but people have come to understand that, again, the home is their sanctuary. And for those who have been fortunate to, have their own roof over their head the last year, 2, 3, 4 years, they're likely going to hang on to that house because they see the value in it. And they also take a look at what the rental market is doing. So we have these prices that continue to climb and climb and climb. the only way to provide yourself with some security in the housing market is to own your own property. Or if maybe mom and dad owns the house and they're allowing you to live with them, or they own another house and then you move into that house. But you have
Mhm.
some reassurance that that that's not going to be swept out from underneath you.
Yeah.
Because in the market, as we know right now, our rental market is just, it's, you could argue it's more competitive than our sales market for homes.
Yeah.
So yeah.
There
So
was, if I could, did you
yeah.
finish your thought?
No, yeah, go ahead. Yeah.
You touched upon, or I think you were, alluding to the equity that a
Hmm.
lot of current homeowners have that have been in their homes or had their rentals over the last, prior to the pandemic.
Yeah.
And specifically those that are owner occupied, the ones that are living in their homes and have this equity. I thought that the article touched upon something. I think they were referring to the equity. They were referring to some of these homeowners that were struggling with inflation, turning to their homes to take out equity and these
Hmm.
equity lines of credit.
Right.
And personally, that is where I'm really concerned if that becomes something that goes to scale
Right.
for our country. Because, I mean, as we tell all of our clients, there's nothing wrong with taking out an equity, a HELOC, a
Yeah.
line of credit, as long as you're taking those funds to either do something to your property to increase the value, or I tell them if you're buying a rental property with those funds, you're putting it back into real estate.
Yeah.
But if people are using it just to pay their credit card bill
Yeah.
or buy their groceries or get a new car, you know what I mean? And I feel like we could really get into it could really snowball and it's very dangerous. And to me, that's the worst case scenario because right now I tell any of my clients, friends, family, anyone that talks about how much their home is worth and how much equity they have,
Hmm.
I go, yeah, that's fantastic. But so what?
Right.
I mean,
Right.
yes, you could sell, you could have that extra 500,000 million, that you had gained over the last, couple years.
Hmm.
But then what? You still need to buy a place in San Diego
Right.
unless you want to leave the county, unless you want to leave the state. It's not dirt cheap anywhere else, as we've talked about on other
No,
episodes.
you're right. Yeah.
But it really isn't anything unless you are going to have it translate directly back into real estate. I see it almost as, yeah. I yes, I understand what equity is, of course, but it's just not really tangible.
Right.
And I that's my biggest concern that I got out of this article, and I think it was right at the very end when it was talking about that. And that could absolutely, affect our economy if we see that happen to scale with people that are just pulling money out of their house and paying bills and buying stuff. And
Hmm.
that's what I just noted right at the end of my notes was that could have so much more drastic and dangerous effects on our economy.
Definitely. And I think that we saw that, in years past,
Mhm.
2006, 2007, people using their homes as ATMs, basically.
Yeah. Yeah.
Um, and the fear is, I agree with you, Jeremiah, that now as inflation continues to go up and people fill their gas tanks up and they see that price tag associated with it, oftentimes the wages are not keeping up with inflation. And
Mhm.
so they have to be able to get funds from somewhere or work harder or longer or whatever it might be to offset that gap. And so one way that they perceive as an easy way to do that is to take out potentially a home equity line of credit to pay bills. It's one of the worst things that you can do.
Mhm.
Um, to your point, if you're taking out a home equity line of credit to redo a bathroom, or put a roof on your house, a new roof, or you're using that equity line of credit potentially to buy another piece of property. Okay, that could make a heck of a lot of sense. But just spending it on everyday items that aren't real, they're not assets, that's for sure. That's where people, I could see, would find themselves in a lot of trouble, and it doesn't take long.
Well, and I also get the argument that, well, shoot, my HELOC loan is only
Mhm.
4%, and
Yeah,
my credit card,
right.
rate that I owe my credit card is 9, 10. I mean, yeah, I know those can get outrageously high as well.
Yeah,
I understand that argument. I just think that's why, again, I just don't think it's healthy to have such a spike in home values, because it's so easy. I love how you phrased it. Like, it's so easy to just be like, it's like a debit card and a house ATM. You just kind of go over to it and just keep on
right,
grabbing money out of it, because you're like, well, what's the big deal? It went up 500,000. All I need is 5,000.
right.
But
Yeah,
and
yeah,
then even before we got on air, I was talking about, the years of the short sales. That's how it starts. People over leverage their equity. We level off, and all of a sudden they're upside down on their home in a very, very healthy housing market.
right,
So
right.
yeah, I think it's a slippery slope, especially if, like this article is talking about, if inflation continues to just be bonkers as well. I worry it's going to force people into that situation.
Yeah, yeah. I think that we could see that. We very well might see that. I don't. At this point, um, everything that I'm reading, Jeremiah, says that we are still going to continue to appreciate over the course of this year. Home values will. Um, where I had a printout of the what was going on this year over last year, and sales prices, list price and sales price for single family detached in North County. And of course, the general trend is that the list prices have gone way up over this time last year,
Mhm.
and the sales prices are even higher. So in general, I want to say it was like 103% of list price is what most homes sell for, and that's on average. Hundreds of homes over the course of the year.
Sure, sure.
And in certain cases, of course, you and I see homes that might sell for 20% over
Yeah,
list
yeah,
price.
yeah,
It's
yeah,
crazy.
yeah. Some of that stuff's bananas.
Yeah, yeah. But yes, I mean, there's a lot of people right now with tons of equity in their homes. They may want to make a move, but unless they are leaving to either an area that's not as desirable in this state, maybe much further inland, or they're leaving to another state, most of them, I would imagine, are going to just hang on to their homes and start taking a home equity line of credit out to make the home what they want it to be,
Mhm.
to add an addition onto it with an office, or something to that effect. Um, that's kind of what I see, and those are the types of conversations that you and I have, and we
Yeah.
have with our clients, and
Wait, and I support
yeah,
that concept. I support
absolutely,
doing that. I think that makes a lot of sense, and
yeah,
um, we don't have any crystal ball, but sometimes when you have to sell, you just want to make sure you didn't dig a deeper hole.
right,
Instead, you say, "Hey, listen, and now look what we have as a part
right,
of a part of this property, whether it's an income property or an owner occupied." So
yeah, exactly, yeah. So it's all interesting stuff. I don't know that there obviously is not an easy solution to any of this. Um, but the Fed knows if they raise the interest rates too fast right now, that it's really going to have a detrimental effect on our economy.
yeah, yeah,
So
yeah.
I'm curious to see where it'll end up by the end of the year. I'm hearing somewhere around 4.5%. to 4.7% by the end of the year. We'll see.
Well, and then if everything abroad over in Europe,
Yeah.
doesn't, doesn't get wrapped up or doesn't kind of come to some, it all just depends, right? I
Right.
mean, I could see rates even higher if everything in Europe settles down.
Right.
But if it doesn't and it goes the other direction, then I could see the Fed just saying, "Hey, we're just going to keep this low," and
Yeah.
Which, well, now I sound like a broken record. We're in a pickle, and our government's in a pickle, and for now, as long as you're a responsible homeowner and don't take out too much on your home.
Yes. Yep.
All right, my friend. Well, I wish I was telling you I had a bunch of exciting, fun things I was doing today on St. Patrick's Day, but I got to keep on working.
Yeah, me too. Me too. Yeah. I mean, there might be one Guinness in my future tonight, but the days of going out to the local pubs are pretty much gone. Yeah.
Yeah. Or that pub doesn't even exist anymore.
There's that too. Yeah. Yeah.
Well, happy St. Patrick's Day to you and the family, and great conversation today, John.
Yeah. Likewise, Jeremiah. Happy St. Patty's Day.
Cool. Look forward to next week. Talk soon, buddy.
All right. Bye.
Adios.